Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report from Monday, January 29th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'll start with this one, big picture always, work our way into the day itself. And that is, as you may recall, if you've been following the Tesla report for the last couple of months, that this was a big test for the market, this descending channel top. This is not the exact line study because it is based on these lows. We actually pushed through it a bit at that time. This is just a trend line off the highs, but because it held so well, it looks like the channel top. And I'd mentioned how the 252.73 channel top could contain buying on a quarterly basis. And once tested, which we did about 5 weeks ago, you should allow for 3 to 5 months bearish continuation into, at that point, it was the, I think it was the mid 180s. Now it's the mid 170s and dropping. The channel bottom to the channel top. The channel bottom to the 252.73 channel top is 174.76. We came close to testing it last week. Had we dipped into the 1% zone, I would have noted in this video, but we didn't. So it is still in reach, and 177 and a quarter precedes it. That is a 5/8 downside Fibonacci, classic Fibonacci number from the January 23 high against that more recent July high. And so 177 and a quarter to 174.76, you can see over here, right? 4-star multi-week containment, able to contain selling through February and even into the second quarter. And once tested, you guessed it, we can round back up within several months, 3 to 5 months, to 252.73. Would it be considered an objective? No. We would need to see the violation of upside resistance levels, line studies, trend-defining line studies, and I can jump to that actually right now and just say that if we close over the next few weeks, for instance, above 218.55, then we do have a buy signal into March trade. But we're a long way from that right now. In fact, as we are presumably testing 175.93 this week, that is the daily chart version, by the way, of the 174.76 weekly channel bottom. Same exact structure, but on the daily chart, it comes in a little higher. So you could use 175.93. In fact, I think that's a solid level to use. We don't include it here. It really is a range now of about 2.5 points, 177 and a quarter down to 174.76. Long-term support, able to contain selling not only for the week, not only through February, but perhaps well into the second quarter. So once we test the mid to upper 170s, I would see some variation of this 218.55 descending 1/3 speed line in reach as a 2 to 3, 3 to 5 week target. I think it's you could say as much now anyway. We're so close to the mid to upper 170s that you could say 218.55 is in reach. We do change the speed line for every new low. So if we break to 175.93 today, we reconstruct the speed line. It'll be very similarly located. And that is really the dynamic here. We could bottom out in the mid to upper 170s, round up within 2 to 3, 3 to 5 weeks to 218.55 and dropping, fall away again. We could fill this wedge out for the next month or two before the market would presumably close above 218.55 and then push onward and upward back to the 252.73 channel top. That is the big picture dynamic. And I think it's pretty clear, pretty straightforward. Now, what if we do close below 174.76? This really does need to be a weekly settlement on Friday. But, I don't want to suggest you should hold a long position If we happen to close any day this week below 174.76, there is a 1% violation threshold that I always use on these longer term line studies, and that is 173.01 this week. In other words, on Friday, if we close 173.01 or lower, we enter another significant sell signal. That should, with the rate of descent that we've seen over the last 5 weeks, could, over the following 5 weeks, yield the 101.81 to 106.64 area. 106.64 is an old descending channel top that still has a significant support potential if we fall all the way back down to it. So if we close 173.01 or lower on Friday, I'm going to call it a 2 to 3 month sell signal that could materialize within 3 to 5 weeks with the high volatility that we see right now. The 101.81 to 106.64 region then expected where we could bottom out. This is double bottom territory for at least a month, quite possibly on a quarterly basis. But I'm going to leave it at that. There's another scenario where we continue all the way south into the 20s, but I don't think that's realistic. But what I do think is realistic is if we close at 173.01 or lower on Friday, you can anticipate the very low 100s. So as we're dipping into the mid to upper 170s, let me just outline the options possibility. Now, these are all broad brush stroke. There are 1,000,001 ways to get long, in the options markets. And so, you can do a numerous number of spreads, but I always just sort of, the objective would be if we were to test 174.76, and I don't want to call it an objective yet, but the clear possibility that you can prepare for and act on would be like a 245 or 250 strike out of the money call that doesn't expire for at least 6 months. That would be the move. And so as we're slipping into the mid to upper 170s, if you're still short the market, you may consider taking all, if not, most, if not all profits. So I don't want to tell you how to trade this. There is obviously the possibility that we violate 174.76 to the downside, in which case you want to keep those puts. So, you'll play that as you see it. But just know that as we test the mid to upper 170s, there's a certain rationale for covering those puts, and in turn reaching for 240, 245, 250 strike out of the money calls that don't expire for at least 6 months. I think I've said that. There's also a near-term play that I've already mentioned in this video, and that is as we're testing, the mid to upper 170s, you might reach for 210, 215 out of the money calls that don't expire for at least a couple of months. I see this as a 2 to 3, 3 to 5 week play, probably more like 2 to 3 weeks with present volatility, where we could top out then through the remainder of February, well into March, and fall back again. So that is the kind of the near-term option approach. But once again, as we're testing the mid to upper 170s, you may reach for this channel top, which is presently in the low 250s and dropping as an objective, whatever that might mean to you. Maybe it's just going long Tesla and holding out for the 240s, 250s over the following 2 to 3, 3 to 5 months. Let's get to the day itself. I think this chart says a little bit anyway. Yeah. So, I've got an intraday pivot point at 186.78, nothing more than Friday's high. We've got the big sell-off. Thursday was the big down day on the earnings report, revenue and so forth. And I think it was revenue estimates. And Friday was an inside day. So, I do like the extremes for Friday, the high actually, as our upward pivot point. That until then, holding below 186.78 will keep the mid to upper 170s in reach as a day objective. We have all these carefully chosen minor points. So if you're an aggressive day trader, aggressive day trader, I consider someone who trades beyond just the trade of the day. You trade throughout the day, maybe half a dozen times or more. And so these minor points are all legitimate, carefully chosen tradable levels. But in terms of the trade of the day, it's remaining short below 186.78 or getting short just below 186.78, anticipating the 175.93 channel bottom, 174.76 on the weekly chart. Inversely, if we push or open today above 186.78, this October low from last year of 194.07 is in reach, where we can place a daily high, potentially fall away from here into later week. This is kind of a 3 to 5 day swing trade scenario, I think. The mid 170s support to buy and the mid 190s resistance to sell. We could trade inside of this area into later week through the rest of the week. But as I mentioned earlier, we haven't tested the mid 70s support yet. But once we do, and you can say that we've come close to doing so, I do think that holding above the mid to upper 170s will keep the 218.55 speed line in reach over the next several weeks by the end of February at the latest. And if we were to close above 194.07 today, I see that as an aggressive reversal short term. This could be a 3 to 5 day move. I think it's more like 1 to 2 weeks. Closing above 194.07, I think you can expect 218.55 within 1 to 2 weeks, where we can top out through the rest of February, fall away back into the mid 170s. As I said earlier, we could fill this out for 1 to 2 months, and it would be a settlement above 218.55, as I've already said before, that would then signal a retest of the 252.73 descending channel top. That could be a 3 to 5 week move in itself, where once again we could top out on a quarterly basis and fall away again. As I've said before, we could fill out the mid 170s to low 250s, a descending channel structure for the next several months or longer. If we close below 174.76 at the end of this week, and that is by the 1% margin, as I show here, then we're expecting the very low 100s within 2 to 3 months, possibly, I'm going to say probably sooner than 2 to 3 months. Is there anything else to say? I just hit the 10-minute mark. I don't like to go past that. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. You won't regret it. We offer a lot of good stuff. Daily SPY, daily triple Q, 2 stock picks a week. And I'm going to leave it at that. I'll be back tomorrow with Tuesday's Tesla. You have a great day.